That's the Investec view on IT services. Not quite selling Wipro, but hey, let's wait and watch what the pre-open rates and then eventual rates throw up. So of IT is that one big talking point. The other two big talking points are banking and FMCG in particular. Mayuresh Joshi, head of Equity Research India at William O'Neill, joins us right now on the show. Mayuresh, good having you. Thanks so much for joining in. I'm really tempted to ask you about HUL and some of the other moves that we saw in trade yesterday. Now, Mayuresh, yesterday, because of that one-day buying due to the MSCI adjustment, we saw that big spike. The OI was up about 40-45%, probably because the futures were trading at a discount in the last half an hour. But do you think this rally is too much to digest? And should people who are sitting on these stocks take some money off the table?
Morning, Neeraj. So two aspects to the whole argument. The first aspect, obviously, is the tremendous pullback that we've seen from the lows for the indices itself. So I think the hope factor that is building up is that the curve probably might start flattening out. Some cases in Europe, for instance, Spain, Italy, have already exhibited that move. And a large element is that something that like this can be replicated. So that's one part of the entire argument. The second element, obviously, is the entire stimuli package that has gone through and the expectations that whatever economic fallout will take place, I think that will be taken care of. Now, in the context of defensives and consumption, specifically the FMCG stocks, to the likes of HUL, which have moved significantly higher, yes, I think it is relatively better placed from an earnings perspective. There will be degrowth because a lot of managements have put forth that they're not working at optimal capacity at this point of time. There are supply side constraints. There are constraints in terms of packaging, in terms of transportation as well, which probably still means that the earnings it will happen, but are not as significant as a lot of the exposed sectors to the economy. So in that sense, again, I think the kind of consensus that is building up towards these stocks is somewhere where I think a lot of interest has come up. But valuations again have gone through the roof at this point of time. So really, I think at this point of time, if somebody is making reasonable amount of money, yes, I would suggest that partial money be taken off, wait out for earnings and wait out for the management committee going forward. Things will normalize. Things are normalizing. Industries have been asked to open up. So there is an element of hope that post Q2, I think these numbers will still keep on stabilizing compared to the others. But it's always making prudent sense that if you're making reasonable amount of money, I think at least booking some profits from these stocks is warranted in market rallies like this what we've witnessed over the last couple of weeks.
Okay. So let me try and take two or three of those questions to Mayuresh on those key stocks, and then we'll get in our chartists as well. Mayuresh, just one quick question. Again on Grasim, we know that companies are going to come out and give warnings. This seems to be a very severe stress warning given out by Grasim as well. Is that a stock that you would look at all? I mean, if you have it in your portfolio, would you recommend getting out of it?
No, so I think it's a wait and watch mode, and you're absolutely right, Neeraj. I think a lot of these companies within all these sectors that you spoke about, specifically Grasim, I think the kind of brunt that they'll probably face in terms of lockdowns, in terms of factories not operating at optimum capacity, and even if it starts, I think it's going to be a very gradual and a slow uptick in terms of facilities coming back on stream. The second element, obviously, is the disruptions, as I've said, for the industry as a whole. It's not just restricted to one. I think the supply side constraints are very, very evident as well. So I think Q1 earnings and the quantum of earnings hit is a large unknown at this point of time. What it really does is, I think it puts a lot of pressure in terms of how demand and how the demand curve will happen in the second half. So annualized earnings are expected to take a huge hit for most sectors, most companies within that. But which companies might survive and how the demand curve will pan out, specifically in the second half, because everything is going to bunch up in Q3, Q4. I think that is where I think the concerns lie. So I think I'll wait on the sidelines, Neeraj, for Grasim or stocks related to that sector.
But in your portfolio, you wouldn't get out of it.
I don't hold that, so.
Yeah, no, I was just wondering. Maybe, okay, Mayuresh, take that point. But, maybe we'll ask our technical experts what to do if you have it in your portfolio. But first, the larger question on the index. Mayuresh, stay on, so much more to talk about.
Those are some stock ideas for the morning. Talking about Kotak Mahindra Bank, yesterday saw a plunge in private sector banks post the Macquarie note, which slashed target prices by almost 45% across the board. Mayuresh, obviously, one stock there, ICICI Bank, was maybe viewed in a slightly more favorable light. But what's your take on the path ahead for these private sector banks, and how much more pain is left for them to endure?
So I think, Devina, first of all, good morning. The valuations have definitely become far more attractive at this point of time. I think it's the only uncertainty related to the earnings aspect that these banks are taking a huge knock or a huge hit. It's an obvious expectation that with loan growth expected to slow down because of lockdowns, what happens in terms of the stability in asset quality numbers that they've been reporting over the past few quarters, the unsecured element of the book itself, whether it's MSMEs, whether it's credit cards, or even the housing part, where I think a lot of these loans have been meted out. I think what happens on those elements if this lockdown continues, and if there are further pressure points from an economic standpoint, I think that is what is creating a dual effect. The third element obviously is the expectations of how NIMs and spreads will hold up. And a large element is that with MCLR cuts happening, I think the deposit rates have also gone down. So I think with the readjustment happening in terms of both these variables, we're expected to see NIMs actually hold up for these banks and return ratios actually come off because of the slowness in growth and expectations of provisioning increasing. So I think it's better off, as I've been time and again mentioning, I think wait out for numbers. I think there's no rush. I think you've seen with the US banks, they've actually started witnessing the pain. How they'll bounce back from the third quarter in those markets will be very, very interesting. So I think it's a prudent strategy to probably wait out for banking numbers, at least at this point of time.
However, Mayuresh, fundamentally, the ones which have lost out big time over the last few days are these multiplex stocks. PVR, I want to come to you on that one. We don't know when would aggregation as a policy become a norm again. Would you, if you have PVR or INOX in your portfolio, even if you don't have, think of somebody who has PVR or INOX in your portfolios, would you recommend getting out of those stocks?
So I think there are two aspects here again, Neeraj. Very frankly, I think, yes, it's a given that the earnings hit is going to be quite substantial. And managements have put forth on record there is no revenue coming through, obviously, because of none of the theaters and screens working at this point of time. And the costs actually start building up. So I think there is every plea that is being put through in terms of rental waivers and so on and so forth. There is a temporary reprieve because I think a lot of the contracting costs probably come off. But I think the majority of the billing and the gross margins that they derive, specifically from the food and beverages businesses, because of the shutdowns that we've seen. And you're absolutely right. I think even if this entire thing starts coming off over the next few weeks, I think people will remain extremely cautious. And again, I think the delay in terms of releases and so on and so forth, I think the earnings hit is a given. In this backdrop and context, I think if somebody is holding on, right, even till this point of time, I think the markets have to a large extent gestated the kind of hit that these movie exhibitors will probably display, both in Q4 numbers partially and Q1 numbers absolutely on a full and annualized basis as well. So with that respect, again, I think there might be some knee-jerk reaction that can still go through. But I think the bounce back will also be equally sharp, and that is something to be observed as well. So I think anybody holding on, even till this point of time, I think don't lose hope. I think the earnings hit is a given for these stocks, but you can very well continue holding on to these stocks and not sell, because I think the sell-off has been quite brutal. And you might be incurring a huge amount of portfolio loss holding on to these stocks. But I think you might very well hold on to these stocks over the next few quarters.
Okay. I just want to focus on another stock, Bandhan Bank. Yesterday we had some comments that came about from the MD and CEO, Mr. Ghosh, and he said that they don't apprehend any repayment issues owing to the nationwide lockdown to contain COVID-19, though at present, they have halted due to the curbs in terms of the overall repayments. But recovery of microloans have stopped. But also he said that interest will be recovered at the time of repayment, irrespective whether the customer has opted for the 3-month moratorium or not. But obviously, the key takeaway from that is that he's saying that they don't see any problem in loan repayment. I think the stock also recovered a bit, but the stock has been beaten down so badly, Mayuresh, that it would probably just be a factor of that bounce coming back in an oversold stock. What's your take on Bandhan Bank?
So I think they did manage to hold on in terms of how the performance has been. But a large element for the entire MFI universe is obviously going to be something that needs to be observed, because I think with lockdown pressures, with a lot of daily earners and daily wage earners probably not going to get a reasonable amount of revenue over the next few weeks. How the repayments will happen and how the collection efficiency will play out, whether it still holds on to that 97, 98, 98.5% is something to be seen. Also, the asset quality that is probably reported, the NPA is still below the 2% mark, net NPA is still below the 1% mark. Whether that still holds up is something to be seen and observed as well. The third element, obviously, is how they are expected to go through their entire disbursement cycle as well. So in terms of underwriting or credit dynamics, how are they going to disburse loans over the next few weeks, months, and quarters? I think that's going to be an interesting aspect in terms of how we are placed at this point of time. So I think I'll wait and watch, Devin. I think I'm not rushing into this. Again, as I said, I think the market is in a very, very fluid situation at this point of time. I think it's between that uncertain zone of what is to be done or not to be done. So I think it's better off laying out a lot more defensives on the defensive sectors at this point of time.
All right, gentlemen, stay on with us. We're going to come back to you and talk about a whole host of other stocks and your recommendations this morning as well. But we're just minutes away from market opening, and we tell you all that you need to know to stay ahead in trade today. First up, Wipro reports a muted set of numbers for the fourth quarter. Operational margins contract sequentially, stop short of putting out quarterly guidance, citing virus outbreak. India's largest IT company, TCS, will report earnings today. Expect a muted quarter with concerns around outlook largely to do with COVID-19. And BPCL seeks to cut Saudi Arabia oil imports by 50% in May as the tankers are full, reports Bloomberg News. Pratap Snacks says it's resumed operation at its plant in Uttarakhand, Maharashtra and Haryana. Endurance Tech's Italian arm has acquired 99% stake in Alda for 3.5 million euros. And lastly, Moody's downgrades Tata Steel's UK holding corporate family rating from B2 to B3. S&P also revises it lower to B+ from AA. This is going to be an interesting one, taking a look at what some of these oil marketing companies are doing. And we've seen IOC do it, and now BPCL. I mean, they're not lifting supplies. They're not lifting crude now, because obviously tankers are running full. There is tremendous amount of supply where the demand is shrinking. And you've seen the IEA coming out and talking about US demand shrinking to a record. But Mayuresh, while they have been, the gas demand is increasing on one side. On the other hand, oil demand has been shrinking. So what lies ahead for some of these oil marketing companies, according to you?
So two aspects here, Devina. Clearly, I think with the shutdowns happening, with a lot of the petrol pumps not working at optimal capacities because of vehicles not flying on the road, there is obviously going to be a huge hit in terms of volumes. The second element, obviously, is how these cracks are playing out. So if you're talking about the naphtha, the gasoline cracks, and so on and so forth, the refining margins are expected to take a hit as well, which basically means that there will be reported advantageous inventory losses that these companies will report. To what extent and in what manner and proportion is something to be seen. And the third element, obviously, is that even if valuations have become very, very attractive, I think this uncertainty related to both these factors, I think clearly plays out on earnings and subsequently in terms of cash flows, and therefore the entire question mark even in terms of dividend payouts. So again, I think very, very watchful on this.
Mayuresh, we'll leave it at that. Thanks much for taking the time out and being with us today.